Hello traders, Gary Wagner here, just after 12 noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, 14th day of December 2018, and this is the Daily Report for Gold and Silver, our weekend review, and we are ending the week with lower pricing across the board in equities as well as precious metals, with the exception of the dollar and the euro. We had these markets really sell off pretty briskly today. Gold losing $5.10 in trading today. Most active February contract closed at $1242.30. That did affect us as we pulled profits on the third leg of our trade today. We'll talk about that in detail as we pull up our technical study. Silver losing about 1.5%, 22-cent drop, closing at $1463.50. Platinum experiencing a $10 drop, closing well below 800 at $787. And finally, palladium losing almost 2% on the day, a $21 plus decline, closing at $1,169. Now, the Dow as well as the other indices did close lower by about 2%, a 500-point drop in the Dow, 24,100. Composite also losing about 2.25%, closing at 69.10. And finally, the Standard & Poor's closing at 25.99. Traders, the first chart that we are looking at today is a weekly candlestick chart of February gold. We can see that we had a significant sell-off this week, and to me, what's most significant was the break today below what was former resistance, and then I believe became support, but only for a very short time, because that didn't last more than a week, as we see the market settled at $1242.30, a net decline today of $5.10. That did affect our trade, which we pulled profits from today. We'll talk about that in a second, but first, let's pull up our daily chart. When we look at the daily candlesticks, there are a couple of things that become quite apparent. The first thing is that really pricing struggled all week with staying above 1246, 1247, which is the 50% Fibonacci retracement of a long data set. We can see that on each and every day this week, we basically challenged the lows. And then yesterday, of course, we traded below that price point. But on all 4 days, Monday, Tuesday, Wednesday, and Thursday, the market did close above this particular price point. That all changed today when equities pressure and a strong dollar took gold pricing dramatically lower, actually trading to a low today of $1236.50. If you recall from yesterday's show, we moved our final stop up to $1,240.13. So we were effectively stopped out with about $10 profit when we consider the three total legs on our trade. The first leg, of course, was we purchased a December long gold contract. About an hour later, we added a February contract to that. The following week, we rolled over the December position, and by rolling over, we picked up $6 there and now had two long February contracts. We pulled about $15 per ounce on our first February contract, and on this last one, we pulled about $10. So through the entire three legs, we picked up $3,000 on the trade per contract of gold in three distinct legs. Lastly, I do want to take a look at palladium today, because over the last 2 weeks, it has attempted, in both occasions unsuccessfully, to take out $1,200 per ounce as a new record close in palladium. Now, this week we did have a new record high close. It came in at around 85, but the market sold off sharply throughout the remainder of the week. The candlestick pattern that I'm referring to is simply called tweezer tops, and they occur when you have equal highs in two consecutive candles, and they are indicating a strong potential that at this particular price point, we have found resistance. It could, in fact, be a pivot point and be indicating lower pricing next week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.